what is your fund's core philosophy, and has your philosophy actually evolved over the past decade?
Look, our core philosophy is a value investing philosophy. Everything is centered around value investing. Even when we're doing transactional opportunities with structured dividend capture, we still recognize that there's an opportunity to sell something, a put contract that's overvalued, and then buy it back when it's undervalued or maybe when it costs zero. And so the core philosophy in everything we do is value investing, but we have a lot of key principles. I mean, we're truly a partnership. So the way that Andrew and I operate is that we're stewards of this capital on your behalf. We're fiduciaries for this capital. We are looking for every opportunity to grow this capital. We take risk management very seriously. Basically, all of my money is in the fund. I mean, I have literally like 100% of my money is in the fund. I'm fully committed and allocated. Yeah, so I think the core philosophy comes from value investing. We have been following Buffett and Munger's rules and philosophies for decades. Everything evolves. All right. There are little things that have evolved, certainly. Our level of concentration has evolved as we recognized how important and, in fact, necessary it is to concentrate to give yourself the opportunity to outperform an index. If you're not concentrated, it's going to be impossible. So these types of subtle evolutions have taken place, but really it's very consistent. From day one, we were selling puts as a tool to buy stock. From day one, we were selling puts on Berkshire Hathaway to own the Berkshire Hathaway as one of our core holdings. In fact, many of our holdings we've now held for almost 10 years. So we're not engaging in turnover. We're not engaging in high levered activities. We are a really core, simplified, best practice-based fund following value investing principles.
So, Matthew, what's your take on Berkshire's Warren Buffett's recent selling on Apple and BAC? And right now, like the cash amounts to like $270 over $1 billion. Do you think that we should be more cautious in this market? What's your take?
I think that part of the reason for selling Apple is because he's not really one to trim, but it became such an overwhelming piece of the portfolio. And there's so many investors inside of Berkshire. I think it's somewhat prudent for him to cut this. It's also a bit expensive. He's not selling it because it's cheap. Okay, Chloe, he's selling it because it's expensive. And having 277 billion or whatever it is in cash right now in treasuries, mind you, gives him a huge arsenal to put that capital to work. And I don't necessarily think he'll put it to work until we hit a recession. Buffett can sit there and hold this capital for years, and he's earning about 5% on that capital. So it's not terrible. I do think that he is a little more cautious. Buffett is a great market timer. He always tells people, don't time the market. It can't be done. But he's not trying to time the market. He's really disciplined and allocates his cash only when there's an opportunity. So the cash builds up when he doesn't find the opportunity. But Buffett is very different than us. Buffett is trying to allocate 277 billion, and we're trying to allocate 2 or 3 million. So there are plenty of opportunities to put $1 million or 2 to work. There's a lot of opportunities, but there's not a lot of opportunities to put hundreds of billion to work. There's only a few companies that they can really go after. And so they really have to wait. You know, he's trying to be greedy when others are fearful. Well, he's not going to get that level of fear until we get into a full-on recession. So I think Buffett will use that capital to pick away at a few companies. You've seen him buying them, but I'm guessing he's anticipating probably at some point we will have a big recession. It will happen. I think probably we have a few more years to go in this bull market, probably full of market corrections, which is normal, which can present us with opportunities. It's really nice to be a small, nimble fund when the markets are flat and volatile, because we can do things that larger players can't do. We also have a longer term focus, so we can buy great companies and ride through the volatility. I think Buffett's becoming a little more cautious, and I just can't overemphasize how outstanding this is to be alive while Warren Buffett is alive and Warren Buffett is managing a company and you can just own it. It's what an opportunity just sitting in front of all of us. You can put your capital into Berkshire Hathaway and you don't have to change your investment because Warren Buffett's doing it for you. He sold your Apple. Now he's back into treasuries. And when there becomes a great opportunity, he'll put that cash to work. So we look at Berkshire as a very contrarian position. It's growing. It's such a nice stabilizer in the portfolio because as things happen, S&P comes down, there are opportunities. Berkshire will become stronger, more robust. It will allocate cash in a down market and accumulate great opportunities. So it's a great holding to own. I prefer owning Berkshire over owning the S&P. In fact, if that would be a very normal trade-off. If you're finding yourself sitting in the S&P, which holds a lot of, I think, quite expensive companies, you can just rotate that into Berkshire Hathaway, and you now have a nice managed fund that's run by Warren Buffett.
Since we are talking about Berkshire, the next question Alan is asking, will you reduce Berkshire once Buffett is no longer at the helm? Also, are you hunting for the next Berkshire?
Yes, we're always hunting for the next Berkshire. We will not reduce just because Buffett's gone. I bought my first share of Berkshire, I think, in 2002. And I believe then people were telling me at that time that they're going to wait until Buffett dies so that they get a dip in the price so that they can buy. And what can I say? Sure, sounds like a fine strategy. I don't believe that's a good strategy. And look what's happened. 20 years later, he's still sitting there on stage with us in Omaha, Chloe. So, and Buffett himself has talked about this and said that actually when he dies, he thinks the stock will go up because the uncertainty of the death will be removed and everything will move forward smoothly. So Munger, when he was around, said things like, if the Munger family members sell when we die, you will do worse. So that seems like a pretty clear message to hold. I actually think that Buffett's estate continues to hold his shares for 12 years after his death. It's 12 years later that his assets get settled, and then they'll be transferred to a variety of nonprofits, foundations, and they'll be spent possibly at a rate of 5% a year in a 501c3, although they might not even be spent at that rate if they have other assets to spend. So it's not like Buffett shares are going to get sold. There's not going to be any immediate downward pressure. I think we have more than a decade after Buffett dies where the shares continue to climb. Buffett didn't design this for his lifetime. He designed this for a true legacy. I mean, this is going to be the strongest company in America. So, we'll very likely just keep on holding. This is an infinite compounder. So, and I'll share with you, I have a minor Roth IRAs for our children. We have Berkshire sitting in there. We have Daily Journal sitting there. I expect my daughter to have that when she's 80.